What's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Trading Week Recap, series I post every Friday where we reflect on the past trading week. There's a lot to talk about right now, so let's get straight into it. And as always, we'll go over each topic that we're going to be discussing, then we'll dive into each one individually. In front of us, the SPY S&P500. You know how we kick these episodes off. So just summing up the general equity markets, definitely a lot to talk about here. We saw a significant pullback over the past couple days. I'll let you guys know what I'm thinking here. We will also, as I always do in the Trading Week Recap videos, cover actually the beginning of Thursdays and Fridays newsletter. Okay, so this is the newsletter, of course, I send out to the portfolio newsletter program. So this is Thursday's newsletter and this is Friday's newsletter. Again, I will just read the beginnings because they just kind of sum up how I felt over the past couple days. All right, we will then get into quickly show you guys this just because I did link it in this and I didn't want to leave you guys hanging here. So I want to show you guys this solid trading view analysis that talks about how to trade bearish patterns like a professional. All right, so he says like a professional, whatever, but this is a cool analysis and I did want to share this with you guys if you want to check it out. We will then move into this Bloomberg article. A week like this was a long time coming for the day trader faithful. Okay, so this is an interesting article that we will go over quickly. There's just a few points in this that I want to read with you guys. So we'll take a look at that. We will then move on to stock market sell-off. For market analysts explain the move. These more so, I just want to share with you guys a few, two of the four of these quotes that some of these analysts had to say, just because I feel like they were well said, and I kind of want to reiterate them to you guys and just talk to you guys about what I think about some of these statements. We will then move on from traditional equities to Bitcoin, of course. So Bitcoin really also leading stocks that we talk about a lot around here, like Overstock, Riot, Mara. So Bitcoin is the leader in some of those stocks, although today it may not have seemed like that, so I will get into that as well. But yeah, there's a lot to talk about today, you guys. I'm sure you guys understand why, so let's get straight into it. As always, before we do get into it, I will ask you guys to please give the video a like if you do go on to gain value from it. Subscribe to the channel if you're new around here. Check out my complete portfolio and daily newsletter if you do want one of these bad boys in your email inbox every day. And if you want to know how I'm personally hedging my portfolio and how I'm positioning myself with in regard to some of the thoughts that I'm gonna explain to you guys today. Okay, so again, hedge my portfolio. I'm sure you guys already assumed this. I do think that we're gonna see even more of a pullback in the general equity markets. So S&P, let me read you guys these and then we'll go on to look at some of the charts. All right, so the sky is falling. Remember, this was Thursday. It's a wild one in the markets today, guys. We're seeing a sea of deep red across almost every sector of the markets. Days like these are a good test of one's mental fortitude. The ability to stay rational and stick to your plan when it's raining fire is what separates the winners from the losers. It also allows you the ability to capitalize when others are running for the hills. In the words of Mr. Buffett, be fearful when others are greedy and greedy when others are fearful. Let me move my face. I added onto a few of my positions that are getting absolutely smoked today because I'm confident that 1, 2, 3 months from now they'll be significantly higher than they are now. It's hard to think that way on days like today, but in my experience, it's what's required if you want longevity as a trader. Also, I just stumbled across a very appropriately timed trading view analysis that breaks down how to trade bearish patterns like a pro. I can't attest to that, but it's a solid piece. I'll link it if you want to check it out. So obviously, you guys cannot click on that link, but it is right here. We'll take a look at this right now. It's called How to Trade Bearish Patterns Like a Professional. Again, this is on tradingview.com. You guys check this out. Go show them some love because I always appreciate people. You can see that 2,500 likes for a trading view analysis is pretty insane. So, I mean, this dude, this is very well thought out. If you scroll down here, you can see he went through all of these. They're pretty much the exact, if you're familiar with bullish patterns, it's the same thing, just reverse, just inverse. So keep that in mind. But if you guys do want to get more into technical analysis, if you're not too inept in TA, then I definitely recommend you go check this out. Okay, let's move on to this one quick. Again, we will just read this short intro and then move into the charts. Rough way to end the week, guys. I'm gonna be honest. We're experiencing what looks to be another liquidity crisis similar to what we saw back in March. That is where almost every sector across the board sells off, including safe havens like gold and silver. Surprisingly, this was very surprising to me, but it made me stoked. If you guys would understand that if you tuned in. I'm a big Bitcoin bull myself. So Bitcoin and the cryptocurrency sector in the green today, that is extremely bullish to me. It proves that Bitcoin and cryptocurrencies aren't correlated to the equity markets. They're in a field of their own, as they should be. To sum up my thoughts on a price action of the equity markets, I wouldn't be surprised if we see a small bounce up on Monday, Tuesday, considering we've seen 2 solid red daily candles. Okay. So this is where it gets interesting here. You can see I pretty much wrote this before we even saw this green candle right here. Okay, so as I was writing this morning, we had this green move up, and that as of right now, I'm thinking that we'll eliminate the thoughts that I have that we will see a bounce on Monday or Tuesday. I now think that we're considering where we close the market today, which is at 342 on the SPY specifically. But again, we did move up. We came to a low in the SPY at least of 335, closed up at 342. So saw a significant bounce up over the course of the second half of the day. That was interesting, even or like the last couple hours of market closing even. Okay. So I think we might have already seen that little dead cat bounce from this 2 days of carnage. We saw this little dead cat bounce relief rally as the market's closing. The SPY in after hours is down, as are many equities, Tesla specifically. So we will cover Tesla, you guys. I'm pretty sure I'm actually going to make a short stock talk covering strictly Tesla and Workhorse. I'm sure if you guys are involved in Tesla, you would know the news, but I'm just going to save that for a separate episode because I want to focus on kind of the equity indices, the overall markets right now, because that's what really matters to me personally. And I feel like you guys should definitely concern yourself with the overall markets right now, just not just specific sectors. Okay, so again, I think Monday and Tuesday might actually get pretty sketchy. I think next week is probably going to be pretty bloody. A lot of people think that this might just be a healthy correction, but what this correction has showed me is something that I've been saying for so long, that there's so many new traders in the market, and that's great. Again, it's awesome that new individuals are being introduced to the markets, financially educating themselves, becoming financially literate, and concerned about the well-being of their financial future. But that also means that there's a lot of inexperienced traders. There's a lot of weak hands involved in this market, and you're really seeing that right now, especially in stocks like Apple and Tesla. Okay, so to sum up my thoughts on the S&P, so this is the same thing as the SPX. I just happened to draw the lines on the SPY for this one. So the same thing applies. It's the exact same thing. This is just the S&P 500 ETF. But I think that we will it's very likely that we come down and retest this area, these levels of support that that the SPY, the S&P 500, has been using since May. So it wouldn't surprise me at all to see the S&P come down here and bounce off. It got pretty close, like 334, to bounce off like the 332 region. So I do think we will definitely test this line. After we test this line, we'll probably bounce up. And just see kind of a little relief rally again. But I do think ultimately we'll probably retest completely, in a complete correction back down to these levels. It's going to be somewhere around this area, one of these little tops right here. So it's either going to be from the 320 region to, so like say 320 to 325. I think it's very likely that we see the S&P as well as many of the other equity indices like the Dow and Nasdaq, because they all follow somewhat similar patterns, see a correction down to those previous highs that we set in like early June. Okay. So that's what I'm guessing there. Always remember, you guys, not financial advice. These things could absolutely just open up Monday and Tuesday, keep ripping, because they've proved that they are strong. But I think that this rally is definitely gonna have a wrench thrown in it, and I'm thinking that we're gonna see it pretty bloody next week. Okay, so that sums up my general thoughts on the equity markets right there. Let's move on. So let's actually take a look at Apple real quick, and then we'll actually look at some of these. Okay, so we'll take a look at Apple quick as well. Again, you guys, Tesla, I will make a specific Tesla or stock talk on Tesla tomorrow, taking a look at the charts. I'll give you guys a hint right now. I'm sure you can imagine by my tone, I am bearish on Tesla, and they just had they definitely had some rough news in after hours trading, like just before I started recording this. So that's, bad news for Tesla, but luckily I was ready for this. Okay, so I'll explain that more in the video you guys are going to see tomorrow. Okay, so Apple, similar to, Apple's just been one of the leaders of the S&P. If you guys remember that TradingView analysis we went over not too long ago, talking about how Tesla, Apple, like they're really just carrying the equity markets. So the S&P specifically is market cap weighted, all right? And that's a very important thing to remember. So when Apple does significantly well, when Apple just rips, that means equity indices that hold Apple are going to do extremely well because Apple has an insanely high market cap. Okay, so I think like we've already seen a crazy pullback in Apple, obviously since the stock split, which this article will go into. This article will go into. I'm excited to cover this with you guys. But to sum this up real quick, I don't want to just make this longer than it needs to be. I think we will pull back to these areas. You can see here, Apple, this is a solid area of support before Apple completely broke out. It would make perfect sense to me to see a retracement back down to these levels. So I think next week, I'm pretty confident in the fact that most equities will retrace to probably these levels of support next week. That would bring Apple to a price of about $105, $106. Okay, so give or take a few dollars, I think it is very likely that we come back down to retest some of these levels and this line of support down here, because we've already seen a pretty significant correction here. All right, and again, a lot of this, it's surprising to me how much the markets recovered over the course of the day, considering they opened up so weak, such a weak opening, followed by a strong opening. So VIXY and VIX, that is, I will be honest, one of my favorite plays right now. I will touch on the VIXY and VIX. That's the volatility index that tracks volatility within the markets. I will touch on that, I think, in the Sunday stock watch. Okay, so yeah, I'm excited to talk to you guys about VIX. I barely talk about it, but I've been very bullish on it for a while now, so I'll talk to you guys about that on Sunday. Let's move into this. So a week like this was a long time coming for day trader faithful. 2-day Nasdaq 100 sell-off reached more than 10% at a point. It was parabolic and it had to sell off eventually, says an investor. What kind of title is that? All right, so last month when the Robinhood Investor app announced plans to shut off the feed that showed what its clients were buying, data sleuths mourned, chronicling the love affairs of retail traders in the stock market had become a pastime. What would they do without it? The information vacuum didn't last long. On Monday, enticed by stock splits at Apple and Tesla Inc., demand from amateur equity enthusiasts, this guy is a savage, was again thrust into plain view when their orders crashed discount brokerage websites all over Wall Street. The wailing crush of the buying added $200 billion to the market value of the two tech giants, extending mammoth runs. Now those gains are history in one of the bigger spasms of the post-crisis recovery trade. A few days of gut-wrenching declines in Apple and Tesla were the harrowing welcome for anyone who had bought into the stock split frenzy. A reminder that stocks don't always go up, to correct a favorite saying. As brutal as it got on Thursday, and for the first part of Friday, for many investing veterans, it was a correction long overdue. I'm sorry. And 100%, you guys, like I've been saying this forever. You can't look at charts like Tesla. No rational individual can look at Tesla's chart right now and say that it's not a bubble. You guys, the majority of my career, I made the far majority of my gains in trading in bubbles. I know what bubbles look like. Tesla is 100% a bubble, and I do believe it popped in again. I'll cover. I'm sorry, I'm leaving you guys cliffhangers for Tesla, but I would just ramble about it too much. I wanted to make a specific stock top for it. You have people thinking the market goes straight up forever, and it doesn't. So Jerry Sparrow, president of the Sparrow Capital Management Inc., it was parabolic and it had to sell off eventually. That's, again, you guys, and I know a lot of the older heads in this space have been proven wrong over the course of this rally. That's what led to a rally. A lot of the market movers were shorting the market going into this economic depression, because we are still in an straight up economic recession. That is a fact. The markets have just diverged from that, and again, the shorts being squeezed out is what was a big catalyst in what led to this rally in the stock markets, and what made a lot of these old heads, a lot of these whales, look stupid like Buffett, kind of. Okay, so speaking of that, I forgot that I wanted to mention this to you guys. Okay, so this is important. That I stumbled upon this in a newsletter, that one of the newsletters I'm subscribed to many. So big money buy sell index, this shows when big money is moving. Okay, so sellers have returned and finally pushed the market out of overbought territory. So this is important, you guys. As much as I talk about how much the day trader movement, the retail investor movement, is really taking over the markets right now, you have to understand that it's still, at the end of the day, it is still institutional players. It is still whales. It's the market movers that do move the market. That's why they're called market movers, okay? So as you can see here, we're finally back below this line of buy sell. So it's similar to RSI. You're in like 25 and 80 are the lines of really overbought territory and then oversold territory. So you can see here, every time, except for right here, this tracks back about a year and a half to January of 2019. Every time we break below this line is when sellers regain control. So now that we've broken this line of resistance, it's very, very unlikely in my mind, unless we see something like what happens here. So we might see a bounce, but I think ultimately we will come up and ultimately retest some significantly low levels, at least around this 50% region. And I think this sell-off will probably last, like the election video I made you guys. Like, the principles in that video still heavily apply. That was just yesterday, but the principles I talked about in that video still heavily apply. Just the bearish principles. Just everything is overbought, everything is way overvalued. The entire economy, or the entire market, is inflated while the economy is trash. So it's only a matter of time until this bubble popped. Catching the top is just as hard as catching the bottom sometimes, but I'm pretty sure that we've topped out, and I'm confident myself that. And trust me, you guys, my money's on this. Like I was just saying, I do have certain puts in place, certain calls in place to hedge my portfolio against a crash in the equity markets. So I do think we'll see a significant pullback in equities come next week, just to sum that up. And again, this big money buy sell index is a pretty solid indicator of that in my mind. Okay, so that said, we touched on that. Let's touch on this real quick, and then we'll get into Bitcoin. So stocks ended sharply lower Thursday with momentum tech shares, including Apple leading the sell-off. Four market experts discuss what could come next. Okay, so I'm just going to read these two, and then we'll just talk about this. Again, you guys, it's just good to understand, like, the reason I'm not getting into sectors today, I'm sorry if I'm disappointing some of you by not talking about specific stocks, but, I mean, you just have to understand what's going on in the equity market overall to capitalize within specific sectors. Okay, to an extent it does feel like too much money chasing too few ideas. It's very hard to make that rotation from growth to value, from disinflation to reflation, without there being some interruptions in the market. So I think it's just a lot of money, a lot of liquidity, a lot of algorithms that are just saying, well, these didn't go up, let's buy them. The other ones may have went up a lot, let's sell them. So it's almost like a computer driven rebalancing. And this kind of comes back down because this guy understands the industry. This guy understands how market movers, how institutions work. They have algos, they have very complex algorithms. That's why I don't like day trading. You're competing against some of the most complex algorithms in the world. You think you're going to be able to outcompete these multi-million dollar algorithms? There's no chance. That's why I don't day trade. Okay, so again, you guys, you have to understand that the whales do still move this market. So this is why technicals do definitely play a factor, especially in this current market when it's so easily manipulated. Like a single, like, whales, the thing about whales is they can't actually move the market significantly themselves, but they can catalyze a move. Okay, so they can initiate like fear or greed. Okay, with a single move, they can spike the price just a little bit and initiate that sense of either fear or greed, and then that leads to like a snowball effect that obviously causes the greater move. Okay, so speaking of greed has a way of just biting you in the ass at some point. And then you have to decide, okay, is it a flesh wound or is it drawing real blood? I think it's more of a flesh wound. I think it's taking some of the weak-handed traders that are coming out, buying stocks like Zoom at the top and are now selling them. We saw it start to unwind Wednesday with Apple. And again, you guys, I feel for those people, like all the people I've been talking about, like, should I buy Apple now that the stock is splitting? Should I buy Tesla now that the stock is splitting? It was so obvious that this was going to happen. It happened slightly later than I thought. But again, you guys remember, I was saying buy the hype, sell the news, okay? Or which means buy the news, sell the event, which is pretty much what happened. Day late, but it happened. And that's not surprising. You see that especially in such bubbled up stocks like Apple and Tesla. Yet, you guys, I'm recording on an Apple right now. Pretty much all the tech products I use are Apple. I love Tesla. Tesla's probably one of the coolest companies on the planet, in my opinion. They're just way overvalued. They're just extremely overvalued. Okay, so that's Apple. That's, again, we're not going to touch on Tesla. Again, VIX, I'm excited to talk to you guys about VIX on Sunday. We'll get into that. And it is interesting seeing, wow, Bitcoin is ripping right now. So at the time of recording this, it is 2:30 Hawaiian time. So this TradingView charts refresh at 2 Hawaii time. So in the past half hour, Bitcoin's up like 1%, up at about 10.5. Okay, so that's exciting to see. I am worried. It's a good sign that it broke up. So there's a lot going on in Bitcoin right now, you guys. It's probably my most saturated chart, but that's because there's a lot of exciting things happening right now. So Bitcoin obviously got pummeled along with the rest of the market. That does lead me to believe. So remember here, I said Bitcoin and the cryptocurrency sector in the green today. So that showed. So they were green. The thing is, they were green, which is right around here when the equity markets were selling off. That's what made me say that. But for the most part, when we did see significant sell-offs, they were correlated. They showed us. Okay, sorry. Let me think about how to articulate this. Today, just this morning, these were uncorrelated. These were incorrelated. They showed no signs of correlation, which is where they move in tandem. Okay, so it was very bullish to me this morning when the S&P500, the equity indices, were in the red, but Bitcoin was in the green. So that showed negative correlation. That's what I want to see from Bitcoin, is negative correlation to the S&P. Those of you who don't know, Bitcoin is not a company at all. Bitcoin is not a tech company. That's why I've heard some of the arguments, or people, it's not an argument necessarily, it's just kind of a misunderstanding of the fact that Bitcoin is like a tech company. Like, it's relatable to Tesla. So Bitcoin is in no way, shape, or form comparable to Tesla. Okay, Tesla has financials. They have a staff. They have a CEO. They have an entire company that's not like financials. They sell things. Bitcoin is an asset class in itself. Bitcoin is a completely separate asset class, like gold. Like Bitcoin is digital gold. That's how I describe it. So Bitcoin has no owners. It physically cannot be shut down. Every government in the world could outlaw Bitcoin and it still wouldn't be shut down because there's just millions of nodes around the world that are on the blockchain. So you physically cannot shut Bitcoin down. It is an entity in itself. It lives and breathes on its own, which is the beauty of Bitcoin and why I like Bitcoin so much. Got to reiterate for those of you who may not have heard me say it before, I don't think Bitcoin's going to become the world reserve currency personally. I don't think it's going to replace the US dollar. I think it's going to replace gold in a sense. I think it's going to take a lot of market share from the $9 trillion gold market and pump it into the $200 billion Bitcoin, which is nothing. $200 billion. Again, Apple and Tesla just added that from their stock splits. Bitcoin is minuscule still, and it serves such a significant purpose in a world that's printing trillions of dollars. Okay, so before we get more into the technicals here, sorry, I was just kind of ranting there, but before we get into the technicals, let's talk about this quick. So BTC dips below 10K as traders ICME gap. Bitcoin has crashed below 10,000 for the first time in 7 weeks. Sad times. All right, so despite buyers quickly pushing prices up back into 5 figures, many traders are anticipating that prices will drop further to tag the most recent CME gap at $9,700. The fabled CME gap occurs when the markets make an aggressive move outside of the trading hours that the Chicago Mercantile Exchange's Bitcoin futures market are trading, resulting in a price gap on the charts, with the most recent gap appearing after Bitcoin's sudden spike above 10K in mid-August. So zoom in here, you can see CME gaps. I have mentioned gaps on the channel before. Again, you guys, a lot of traders do look at gaps, especially a lot of complex traders. From a technical perspective, of course, do eyeball gaps, okay? And gaps do provide some significant, similar to a line of support and resistance from the past, gaps really serve as kind of a similar thing there. Again, you guys, when I'm looking at charts, I don't really acknowledge gaps, but I do mention gaps kind of a lot. So gaps are, I do look at gaps myself. I do think they hold some weight in terms of technicals. And you can see here they are eyeing a gap at $9,600, $9,700, and why that's important is because $9,600 and $9,700 perfectly coincides with this greater multi-year trend line. That's why I made it thick here. Okay, no, wait, sorry. That is okay. So it's around 9,500. Dang it, why did I think it was 9,600? Okay, so maybe because it was back here. Okay, anyway, same kind of area. 9,700 would be the CME gap. That's what I'd look for. Worst case scenario, I think, is Bitcoin comes down here and tests this like $9,500 region. Just because, again, we'll zoom out here so you guys can see what's going on from the macro time frame. Again, you guys, this was a very important trend break for Bitcoin in everyone's opinion. This is what was the catalyst for that breakout. This multi-year downtrend since 2017, Bitcoin has been in a technical downtrend until it broke out right here. That's why you see it explode once it broke out of this. Okay, so same principle. I always talk about this principle. What was once resistance, which was this line for a long time as a line of resistance, is now support. So it wouldn't surprise me to see, let's go to the back to the daily here. So it wouldn't surprise me to see, actually I kind of want to go back to the weekly to show you guys that 21 EMA there. It wouldn't surprise me to see, to be honest, again, Bitcoin come down to 9,500. I know a lot of people don't want to hear that. I don't want it to happen, but that's just how it goes sometimes. And it's not phasing me because my eyes are on the greater cycle. Okay, so again, I wouldn't be surprised to see Bitcoin bounce down to 9,500. It could recover. Again, you guys, this market is so wild. It has breached past this line of support and resistance, primarily resistance that it used back here twice in February and in June. So it didn't even stutter around that. On the daily, it actually did close the daily right at those levels, and it's starting that next move up. If Bitcoin is able to break back up above, wow, that's so close, back up above this line of support right here, you see this turquoise line. If it breaks above that and is able to reclaim like 10,800, it has to close a daily above at least 10.7. If Bitcoin can close above 10.7, that's a very good sign, and that means we could just be hopping right back into this channel. But until Bitcoin, from a downtrend perspective, until Bitcoin breaks back up above like 11.7, it is technically in this downtrend, this orange line right here. Okay, so I know there's a lot going on there, you guys. I will keep you posted. Again, even with everything I'm looking at right now, it's hard to articulate kind of what I'm having a hard time figuring out which I feel are the most important metrics to look at. But just know this, you guys, like the day-to-day, like I always say, doesn't mean as much to me personally because I'm not day trading this. I'm in Bitcoin for the long term because I'm so fundamentally convinced that Bitcoin serves a very valuable purpose in this current economy. Okay, so Bitcoin, very excited to see what happens here. It will be interesting to see how this weekend plays out, because weekends, obviously the markets, the equity markets are not open on the weekend. That's another beautiful thing about Bitcoin, is that it's open 24/7. It never sleeps. I always do that. Money never sleeps, baby. So, I mean, Bitcoin never sleeps. I should change that right there. Definitely not gonna, but it's a stupid joke. All right. Anyway, let's wrap it there, because I feel the rambling coming on. I hope you guys enjoyed this. Again, I hope you guys gained some value from it. I'm sorry once again if I did not touch on any stocks like Sorrento, Moderna. There's really not much to say there, you guys. It's kind of it's obviously disappointing. Sorrento got absolutely crushed today. For those of you guys who want my initial take, I did cover it in the newsletter a little bit, so that's where, I mean, straight up pitching it, that's where the newsletter comes in handy. I do cover a lot of my positions, because I will say that I am still positioned in Sorrento. I'm not nearly as short-term bullish as I have been in the past, but I still believe in the long-term prospects, similar to a lot of these other companies that may be seeing some blood in the short term, but it doesn't change the long-term prospects. All that's changed in my eyes for a lot of these plays is the weak hands are out now. So yeah, again, I'll talk about that more in the future, but once again, if you guys do want to know my exact positions, how I'm hedging, my VIX plays, my real-time put option plays right now, check out my complete portfolio daily newsletter. Once again, all call options, all put options, stock positions, cryptos, in a spreadsheet on this teachable website. Along with that, I do send out an email newsletter every trading day during market hours, talking about the trades I made that day, rationalizing my thoughts, as well as just giving you guys my general thoughts on the market. So again, it looks like this is kind of how I open up most, is just giving you guys my general thoughts on what's going on across the general, financial markets as a whole. So equity markets, Bitcoin, gold, silver. Yeah, just give you guys my thoughts, because once again, you guys, I never focus on specific sectors. I have many sectors within my portfolio, because I feel like a well-balanced portfolio is the most healthy thing in terms of in terms of longevity. If you want longevity in this game, and in terms of my style, if you day trade, that's perfectly fine. But as far as my style is concerned, I want a very well-balanced portfolio. Therefore, I care about many sectors within the market. Okay. So once again, I hope you guys did enjoy this video. Please like it down below. Drop a comment if, just give me your thoughts. Just talk to me about whatever you want. Always love learning from you guys. Always love talking shop. Stay tuned for the Tesla video tomorrow and the Waves Weekly. So I will post that short Tesla stock talk and a Waves Weekly tomorrow. So I'll catch you guys then. Until then, always remember, take action, make waves. Peace.